We're joined live by Prakash, Head Institutional Clients Group at Asit Mehta Investment. Prakash, thanks for joining us live on the show. What do you make of the mayhem that we're seeing on the street today? What's the single factor that's creating this fear in the market? Is it global cues or is it the movement of the rupee?
Yeah, I think it's just the cause and effect. We already seen global cues deteriorate so drastically in the last 1 week, and the rupee has just not been able to hold on its own. So, given the fact that even the RBI intervention seems to be very feeble and very weak, my sense is people are expecting the rupee to hurtle further down and probably make some new lows as low as about 55.5, 56. So if that is going to happen very quickly, we are actually staring at a situation where, in the absence of liquidity, you have a fiscal deficit that's yawning, it's getting bigger every day, and the government's absolutely got no clue what to do with it.
Prakash, I have to know, the rupee as well as the global situation is still a developing story at that. How weak could we get from the current breach of 48.50 then for the Nifty?
Correspondingly, you could probably, the rupee is already kind of gone below the earlier low of 54.30, and we should probably end up testing about 47.30, 47.20 on the Nifty very soon, which is a corresponding number at about 55.5 on the rupee's value. So I think that's really not something that may happen immediately, but the market is losing steam. It's drifting almost listlessly into that zone. And any kind of negative news, any kind of a selling that could come could actually make it hurtle down another 60-70 points on the Nifty very easily.
Prakash, does it also make you favorably look at the IT pack? There have been a lot of other headwinds as far as the IT space is concerned, but the fact that the rupee continues to be weak, is that one reason why you may look to double at some of these IT counters?
No, absolutely. And not only that, even from a pure valuation perspective, IT was hammered down a bit unreasonably so, given the kind of symptomatic expectation of very weak quarters going forward, especially after we had the Nifty results this quarter. But if you really look at things, for IT companies, they couldn't be so bad. And even if we were to look at a moderate growth rate of about 14 to 16% for the entire FY13, I think IT companies could probably be the surprise, provided you get into stocks that are not hedged their positions for a very longer term perspective, because otherwise the benefit of the weak rupee isn't actually going to come home. So you've got to pick those stocks, TCS, HCL, some of them could really be very promising at this stage, yeah.
Prakash, what about the OMC pack? Of course, BPCL has, other news supporting the counters move today in lieu of the new discovery that they made at the Bassam Big Block. But is it a good time to buy into OMCs given the crude cool-off?
You could probably benefit temporarily from that, but I'm not too sure whether the other OMCs other than BPCL are in for some sort of a major re-rating of sorts. BPCL has been showing some strengths fundamentally right from the last, the beginning of this May series, and I think that's the only stock that could probably be looked at. You can't probably compare it with the other ones and expect the same sort of a behavior. So if you were to look at from a fundamental perspective, I would only get into BPCL for fresh positions and not the other two.
What about the banking space, Prakash? Obviously, they're leading the fall in the markets right now. Do you think there's more downside in store for the banking pack?
No, I think that's more in anticipation of the weakness that could probably accrue within the overall financial system, the global financial system, if there were to be a major crisis crystallizing in Europe, particularly if the Greek exit were to precipitate some sort of a default contagion. That's exactly what everybody is kind of getting wary of. But I think that's the opportunity. Banking could probably bounce back much faster as and when we have a turnaround once the panic settles, and that could take maybe a month or so. But I'm talking about any bounce back would be definitely led by banking, because things are actually getting much more beneficial, much more favorable for the banking system. We've had decent results, at least till now. We've really not had the NPA issues kind of balloon into a state which is not controllable of sorts. We already had a repo rate cut. So I think banking could probably be the surprise element after a while.
So Prakash, what is it that you would advise keeping a close lookout for when it comes to banks, and at what levels should one start nibbling into the space?
You would have to definitely go with the ones which are much more agile, and by virtue of that, some of the smarter PSU banks and the private sector, the smaller new age private sector banks. You've got IndusInd, you've got DCB. On the bigger side, you've got Axis, definitely Kotak and HDFC as well. SBI maybe not in PNB, not a PNB, not a BOB, but definitely an SBI. It would make that list. And of course, you have some of these smarter ones, which, as I said, the mid-sized banks like Karur Vysya Bank, IDBI Bank, UCO Bank, which have decent balance sheets to leverage on this situation. The credit growth could actually be very rapid for the ones who are sitting on decent cash.
Prakash, what about Tata Motors? That stock obviously is down in trade today in the back of poor sales from JLR. What's your outlook on this particular stock?
I think, the weakness in Tata Motors global sales numbers has come at a time when the market sentiment was absolutely at a very low kind of a, situation, and that's made it very vulnerable. So there's a little bit of an overreaction. If you look at the numbers, we've seen a moderation in the Jaguar growth. We've not really seen that same thing happen on the Land Rover side of the portfolio. And with 56-57% sales coming from the global scenario, of course the domestic numbers really don't matter so much. But April cannot be seen as a turning point unless it's followed by another couple of months of weakness. And my sense is there's an overreaction on the stock. There has been some profit taking, heavy profit taking, because it had run up quite a bit. So from that dream run, probably it's reasonable to expect people to take some money off. But otherwise, it's a great stock to get into at lower levels again.